Good day, traders, and welcome to the premium video newsletter for July 3rd, 2013. Let's start off with the fundamentals as usual. Asian stocks slid on Wednesday as Egypt's unfolding political crisis pushed the price of oil to the highest level in more than a year, adding to an uncertain global outlook, to say the least. The sell-off came as Egyptian President Mohamed Morsi vowed not to resign, despite the demands of millions of protesters and a threat by military to suspend the constitution, disband the parliament, and install a new leadership. Egypt is not an oil producer, but it controls the Suez Canal, one of the world's busiest shipping lanes, which links the Mediterranean with the Red Sea and gives it a crucial role in maintaining the global energy supply. As a result, oil prices rallied to over $100 a barrel once again. In Europe, stock markets slumped after a yield on Portugal's benchmark 10-year bond surged almost a percentage point to 7.31%. Investors are worried about the future of the bailout country and its efforts to get a handle on its debt after two cabinet members quit. This news did not affect the U.S. stock market. ADP, a payroll processor, said businesses added more jobs last month than analysts had expected. The government's broader monthly survey of U.S. employment is scheduled to be released Friday morning. Economists predict that employers added 165,000 jobs in June. Keep in mind that Bernanke stated that one of the factors that the Feds will be looking at is unemployment numbers in deciding when to curtail the bond buying program. So a positive report will be good for the economy, but it may not be so good in terms of maintaining aid from the Feds, which the U.S. needs right now and will for the next several months. So keep in mind this when Friday's numbers roll out. The gold market rallied this morning about 10 points to the 1250 level, and I'm anticipating a bit more upside during the next several trading days. Technically, the resistance level is around 1300 to 1350, and I believe we will wind up there before declining once again. As promised earlier this week, I wanted to take a look at a few currencies for you, especially the ones that are interesting. In particular, I wanted to provide some analysis of the US-Japanese pair and the Aussie dollar. Looking at the US yen spread, the market looks a bit oversold. The short-term stochastics, which is a bit more sensitive than the RSI, is showing overbought levels. This is not very unusual for stochastics in a rising market when the trend is sporadic. However, in this particular case, the uptrend has been fairly stable and consistent. Therefore, I'm putting some weight into this measure. Further, the market hit par and backed off very quickly from that level. This also shows me that there's some strong resistance at this level, and if nothing unforeseeable comes out from Japan in the next few sessions, I'm anticipating more decline in this pair. The only technical factor that's causing me some hesitation is the symmetrical triangle formation. This shows me that the market may be drifting for a while around this area. I will update you as things develop. Another market I want to analyze is the Australian dollar. The market has been trending down strongly, and many traders are wondering if this is the end of a strong move or a beginning of a parabolic move down. If you look at the RSI, which I'm using when there are extreme trending situations, the RSI is not, I repeat, not oversold. As I mentioned a few days ago, the RSI takes into account the speed and velocity of the move as well as the actual price decline. Notice how consistent the Aussie has been moving down. The bar and range sizes are consistent, and the move has been fairly slow in light of the trend slope. If move downwards were parabolic like a waterfall, then the RSI would quickly alert us to an oversold level. but when the move is slow and deliberate with consistent volatility, the RSI is very slow to register oversold price levels. What I do see in this market is divergence between the RSI and the Aussie. Notice the RSI is making higher lows, starting as far back as June. This tells me that the market is approaching oversold levels but slowly with consistent momentum. I would monitor the volatility and the range on this market for the next 3 to 5 trading sessions, and if the volatility increases, I would continue holding the position short. If, however, the market contracts and loses volatility, it will tell me that it's a consolidation and maybe a possible reversal. I would be cautious holding large short positions at the current time. That's it for today's tutorial. The US stock market will be closed tomorrow. I will be off till Sunday and will update you with a newsletter on Sunday night. Tomorrow and Friday, I will add some workshop modules into your membership area. Have a great 4th of July, everyone.